What's up, y'all? So I'm coming, hitting y'all with another chart breakdown. Since Tesla's being talked about a lot in the market since it's running, I just wanted to kind of talk about how I charted the stock and how, once I knew it got past a certain point that I pretty much knew it was gonna run, right? So as you can see here, I'm on a weekly time frame, which means if you don't know, each of these bars represents 1 week of movement, and you use this weekly chart to, find the bigger levels in the market within a certain stock and the bigger trends in the market within a certain stock, right? So I could have started and drawn this trend line all the way from up here, which has been, November of 2021, but I just started it right here. So it's a downtrend from April of 2022 all the way until here. I drew it over here. Then I drew this uptrend from January of 2023. Got one touch right here in April of this year, and then I drew it all the way over here, right? So what I want to point out is I drew my trends, but then I also drew my levels, right? 270 is a level, 276 is a level, one touch, two touch. 270 is a level, one touch, two touch, fake out, touch right here, break down. So when you draw these trend lines like this in the market, you also want to draw your levels on the weekly chart because the levels that hold on the weekly chart are strong levels of resistance and support. So this election week, when I saw, well, actually, let me point this out. So as you can see right here, right, you could have gotten faked out here if you didn't draw levels. Oh, okay, yeah, it broke the trend line and it closed at the trend line. Yeah, that means we're gonna take off. Let me go ahead and buy for next week. And then after this, you see at 270, it opens next week right at 270, goes up a little bit, fakes you out to about 274, then boom, moves down to 247 around there under the previous downtrend that it broke before, right? So that means it's not ready to go yet. And it bounced from a resistance that has been touched multiple times, 270. So that's why trend lines and levels are important. So after it bounces from this week, right, then it opens up down here, 244. And this is election week, right? So obviously you see this big move from 244 once it breaks through the trend line, the downtrend for 2 years. Then it breaks through 270, which is a previous resistance. Then it breaks through 276, which is another resistance. Then it breaks through 311, which is another resistance. Then it closes right at about 320, but it ran to, around 330-ish or so before coming back down. So what you want to do is break down the chart even more, right? Let's look at the exact day that this happened. Obviously, election week, boom, right? So what do we see here? As you know how the wicks work, how the candles work. This is a gap up. It opens here on the day, probably goes up a little bit, then comes back down, or it does the opposite. Opens here at 285, comes back down, bounces right off of 276, then closes up here, right? What you want to do is, if you want to make sure you're not getting faked out and you're not just, it gapped up, I'm gonna buy it to open, and then you end up seeing your option go down $10 in price, or which would probably be like 40, 50, 60% down, right? And then it fighting back, and you're like, ooh, okay, I finally got my profit back. What you could do is make sure you're paying attention to the previous levels, because what did it literally do? It gaps over above two resistances, but then it comes back down and it bounces off the nearest the latest resistance that it passed over that now turned into a support. So it opens, goes down, bounces off this, and once you see it bounce off this, that's how you know it's going to be a good time to buy, and you could have rolled this up here, right? Now, when you're looking for your entry, what you want to do is take a look at this hourly chart. So this is the day that it gapped up, right? Right here. From here, gaps up from 252. It opens up here at 284, goes up, touches 289, 290, comes back down, bounces right off of this previous resistance that's now turned into a support, and then it closes at 280, right? Or 281. So, in my opinion, the best and most optimal time to buy would have been right here. Once you get this candle close above this previous resistance that now shows that it's a support since it bounced off, you get this candle close right at 281, buying right here on Wednesday, and then riding this up into the rest of the week, and then all the way on Friday, you get a 280 to 328 move if you sold the top, and if you sold a candle close right here, a 327 move, right? So check the weekly, make sure you're seeing the trend on the bigger time frame. Check the daily to make sure you're not, you're looking at the daily levels and you know exactly what days things are gonna, either break the levels or break the trend line. And then when you're looking for your entry, compare your levels that you drew in the weekly and on the daily to the same chart in the levels that you're doing on the hourly, because you use those levels that you drew on the weekly and the daily to find your entry on the hourly chart. So remember how I said I drew this resistance at 276 on the bigger time frames? Look, on the hourly, when you break it down even more, you see that became a key level because it opens up here, comes down, bounces, and then from here it bounced and it took off and ran 50 points over the rest of the week, right? So always go from the weekly, then go to the daily, and then when you're looking for your entry, compare what the hourly chart looks like to the levels that you drew on your weekly and your daily charts. And as you can see, Tesla's been on a run ever since, right? Like, look at this. If we're just going from the weekly, this thing, since it's broken this and broken these resistances from here, 240 to at peaking at 430. And that's within the last 1, 2, 3, 4, 5, 6 weeks, right? So let's say you see this on a weekly time frame. You're like, hey, look, Ryan, I don't have enough time to really monitor and watch this. But you see this break and you're like, okay, I might want to do a month long 300 call from here. You would have made bank on this because right now, thing is sitting at 420 with it peaked at 430. So always use the bigger time frames to draw your levels. Go down to the daily. And then when you're looking at your entry, you know, go to the hourly chart and then compare what entries look good based on the levels that you drew on the bigger time frames because those represent stronger areas of support and resistance.